Okay, so Mr. Vijay explained the year-end review. Now we are going to talk about growth analysis. One of the things that is extremely important to understand is the dimension of how we are moving forward in year review. So the way that we are looking at the growth analysis is simply by numbers. The larger the numbers are, the greater the value of the company becomes. When we spoke with NASDAQ private market during this 2025 and going through the learning curve and understanding how they can assist us in providing opportunities where we can meet with the new institutional or accredited investors, there were always magic numbers. And these magic numbers are right now about 40 million, 100 million, and 500 million. So growth analysis of ours came back from the fact that we started planting certain seed during 2024, watching it and modifying it and applying the best methodology of our algorithmic uh, protocols, and then taking that into a consideration and building a way that we can accomplish the net result. And that is why when we came earlier to this slide that we showed you the acquisitions, now we are building the acquisition pipe. So we expect additional acquisitions to take place and probably moving forward to 2026 by forecast financial year end September 2026. We predict, this is management goal, to provide $100 million in consolidated revenue. So under this program that we are talking with the growth analysis, we grew the company from zero in 2023 to 30 million. That is 30 million percent increase in sales. So with that kind of a financial overview, what we have done in here is the ability to provide the Dropbox folder for you. And under Dropbox folder, there are information available because mostly I'm doing screen sharing here, and we post the financial statements here. So therefore, when you go to the consolidated financials or the pro formas, then you will find that information. This information can be sent to you individually or independently, but we basically are going through this, and then we are in the stages of September 30th, 2025 for our fiscal year. Then we will have subsequent event, and the subsequent event will be the companies that we have acquired through ICDN, through Metaxchange AI. So when you go to the site and you come to the subsidiaries, then you can come to this page and essentially scroll down, and then we are building the 2026 models for every one of our strategic partners. There will be platforms, what we call digital media hubs, that is founded on NETSTAIRS ICDN, will be provided to these institutions, and these institutions will be able to proceed accordingly. So the general idea is, again, we become the sugar cone provider. Our distribution becomes the protocol. We wrap it up with a model that it helps them to increase their cash flow. It increases their worth and display of capitalization, both on the equity and debt side, so we can help our subsidiaries in a variety of format as we are transforming them into a consolidation. So when you come back to here and you will find those financial statements, then these financial statements are obviously designed that they can be available to you, and you can download them, and then you can view them based on your own leisure and so forth. So these are the information that gets consolidated from IFRS accounting. So again, under here, under M&A, every subsidiary has its own folders. So therefore, everybody can go to, for example, Asia Judah, click on it, and be able to obtain financial statements, executive compensation, contract that we signed as a board resolution and all of the contracts that we have talked about. So when you come to here, then you can see their financial institutions. So this objectivity is allowing you now to understand where we are with the financial overview. So our goal are a two-pronged strategy. A, to apply and look for 5 million or greater acquisition. On a certain exception, we accept 2 million and above with the audited financials, 2 years pro forma, and what we call evaluation form that is called 409A in United States. And that is right now is optional. So we are not going to enforce that to a lot of our shareholders. But more importantly, when we come back here, is our goal and objective is to build the innovative solutions that we are talking and make it into a cost contained protocol and then allow that cost savings to become part of the gateway in a variety of format because it's all about cash flow management. So now, effective January, our parent companies become the recipient from each subsidiaries through the arrangement that we are making that they upload and then through ERP driven systems we build relationship so everything becomes billed to Metaxchange, shipped to the subsidiaries, and then we will enter into billing, collection, receivable, and so forth. And now we have built series of initiatives. These initiatives are important to generally understand where we are going, both as a stockholder and as a company that we are looking for. First of all, let's talk about some of the areas that we have just shared with you in this kind of a context. So when we are opening up this page, if you will, and bringing it to your visual valuation, then there are a series of documents that we basically present to you, especially with forward-looking statement, because everything we are doing is projected potential. With the projected potential is what we are building the infrastructure. So we obviously have the presentation that you can again download it, view it. So we are going through these slides fairly rapidly, but just giving you a general idea of why we are moving into consumable cyclical through ESG model with Meta Exchange, where we are creating predictive revenue. And this predictive revenue has many factors on it, but more importantly, we are looking at the fact that our gyroscope, if you will, as our client growth was based on two factors. One was on organic, and the other one was acquisition. Acquisition has given Pipe the original way that we started with the technology and market and distribution to capitalize itself. And then recently, with the visit of President Trump to Malaysia and APAC market, gave a clear cut of where we are standing with the tariff, with the regulations, with the relationship. And this was extremely important because primarily our subsidiaries are in Malaysia. So we have this reciprocal trade right now with them. Although we are a Fort Lauderdale based operation, United States, but all of our holdings and subsidiaries right now are held in the APAC market. We are opening up the relationship through Latin America and Australia, but more importantly, the headquarter, the Fort Lauderdale, with their two-pronged strategy, created a faster pace in here that you saw yourself through reaching out. So we started with the K Media legacy and trusting and publishing, which we have normally a weekly agenda, and we are helping them out with that kind of a transition along with ours. But more importantly, the strategic outlook that we put together through establishing this kind of digital media room that we are sharing the technology with you, working with the associations, with the network to help them to grow, but bring in our acquisition just before start acquisition to $27 million, and then allowing our partners to explain to us how they are working in their distribution network, and we'll be able to accomplish and build a new ways that it can help them out to grow their business and bring in a greater value not only for themselves but also for us. So this is a very important factor because of the cultural diversity and the gradual processing that we are putting with our own strategic partners. But we have a very simple goal. Our management goal is to bring the company to 100 million, which brings the company to $1 billion valuation. So with this kind of a setting right now, after this round of acquisition, we believe the stocks from $10 will increase to potentially $12, and we will be negotiating and working with the new acquisitions that it can help us out to bring the value of the stock to a higher ground. So, with that kind of a setting right now, you can exemplify and appreciate that our growth strategies that we are sharing with you through this plan comes with this kind of protocol. Now, what we are doing, we have been able to identify obviously the key trends using AI and creating a reveal of a data on a consumer approach through consumer cyclical plans and creating gateways that we can build a better relationship between us as our own subsidiaries, our supply chain, and our customers. And by serving our customers more effectively, we will be able to provide a greater value and increase revenue through this kind of settings. So, this process right now is giving us to bring the know how. As we were saying, that we are not going to be selling the services or the licensing of the technology, we felt these are valued assets, intellectual property, IPs, that we can help our own subsidiaries to increase their value, therefore, the value and the share price and increase in sales of the company, which it ultimately benefits all of our stakeholders. So, with that, I will conclude this section of the presentation.